Richard, a perennial favourite of ours, Credit Suisse. Share price has been falling for a long time, underperformed its peers. We'd been writing for months that it probably needed more capital. Swiss National Bank comes out, points at it, says, you need more capital. Credit Suisse turns around and goes, no, we're fine. The board likes our plan. Everyone likes our plan. We're cool. Thank you very much. And today it announced it's going to raise a whopping $15 billion, roughly.
Swiss francs.
Same thing now, almost.
Yeah, almost.
What's up?
I think there's been a recognition that the Swiss National Bank had a point, and if you like, it's taken the Swiss to deliver a message that investors have been making for ages. And the problem is that this is in a two-phase capital raising. The first phase, easy enough, and the surprising thing this morning is that they've gone back and talked to their friends in the Gulf, and they've also looped in Temasek in Singapore and a couple of other real blue chip investors, in fact, from the private sector. So they've got about, I think it's
that's the 8.7
or 8.7 billion
yeah,
in the bag. Now the problem is that investors like real Basel II type common equity core tier 1 capital, and in trying to meet their Swiss rules for the Swiss regulator, they've raised some of this stuff, but in there are some things called participation securities. Basel doesn't even think about those, but the Swiss national regulator, completely separate from Basel, by the way, which is in Switzerland, the Swiss national regulator lets those through. So it looks as though Credit Suisse is a lot further down the capital path than it really is, but actually on a full-blown Basel basis, this has only still got them up to 6.3%, I think it is, so still way behind.
Even at the end of the at the end of the year? No,
at the end of the year there will be further measures, and I'd say the balance of the 15.3 billion will come by end of the year, but there's a high degree of subjectivity about these. Some of these things involve staff saying, oh, we're going to take shares instead of cash. Bonus, you know, a bit out of fashion these days, I would have thought. And they're also going to do script divvies instead of cash, all sorts of little tweaks and turns, some real estate disposals. That should get them there to 9.4 on the Swiss basis, but still on Basel probably, I don't know, 8.6, 8.4, somewhere around there.
So still short of the 9
still
at the end of the whole process.
And investors are the real regulators here, so they're the ones that are saying, let's have Basel here and now.
And it was also second quarter results today as well. We've only just got a little bit of time left. And how were they indicating on how the sort of second half of the year is looking?
Yeah, they're pretty pleased with themselves. But I think if you look at the rest of the market, they've had a reasonable time in equities. They've done better than expected in advisory business. But FIC, they've had a great quarter if you look from a year ago. They've doubled from a year ago, but they're down 40% on the last quarter, and this has got to be the real issue now for the rest of this year.
So they needed a capital raising, they did it, but questions operationally in the second half. Thanks, Richard.